Welcome to Dividend Talk, episode 254. A conversation with Eloy Snowball about 3 Spanish dividend stocks and the art of not selling. Derek is still enjoying his vacation, so I'm so happy to have Eloy Snowball with me today. We will discuss his 3 favorite dividend stocks, why he is so inspired by an article about the art of not selling, but also what to do with Hershey with the new CEO and many other questions answered by the community. Guys, before we get started, if you are not a premium member yet of Dividend Talk, go to dividendtalk.eu and check it out. You can sign up, get a free sample as well about what it is all about. More than 100 dividend stock cards, also 20 deep dives per year, building on the 40 almost that we have already. And a course about the 3 financial statements. Check it out, guys, but yeah, let's get started. Hello, Eloy. That's been a while. Welcome to the show, my friend. How are you doing?
Thank you. Very well. Thank you very much for inviting me again. It's a pleasure to be here with you.
Yeah, we just had to have you on. Maybe for our listeners, I think it must have been 2 years ago now when you were together on here with your friend Alberto.
Yeah, it was like 2 or even more time ago.
Yeah,
like
maybe
2
3
or
years ago.
yeah,
We
2
had
and a half
Alberto.
years.
2.5 years, yeah.
I listened to him. Excellent.
Yes. But you're both still together, right? I guess I know you're not married, but you're still like friends and...
Yeah, of course.
Yeah,
He's a very good friend, and we still have the community of Cartas del Dividendo. Even though we are not writing the newsletter anymore, we are still in contact with all the family, and we have a Telegram channel, and we are very happy with them.
That's awesome. And I know it over the years how many times we had also engagement from the Spanish community and how much they really appreciate what you, Alberto, and the other co-writers, co-authors of Cartas del Dividendos have done. So kudos. It's, I guess, for everyone a bit of a pity. But maybe any reflection still on that time? We spoke a little bit before the podcast, but how's it feeling now as a free man?
Yeah, I feel strange because I don't have any more writing to do. But I also have a lot of work right now. So it was a good timing to give a pause, and probably will come back sometime later.
Nice. And how is it with the dividend investing going? Where are you kind of on the journey right now?
I'm doing pretty well, but I'm mostly disconnected from the stock exchange. I mean, I'm following it just not very much.
That's good. A bit of peace of mind. But that's also a beautiful thing. And I think that's a beautiful thing, right? So you have a dividend portfolio full of individual stocks, right?
Yeah. And actually it's working.
You sleep well.
Yeah, I sleep well, and that's the beauty, as you were saying, that's the beauty of it, because you can disconnect and you can see that the results are still, the dividends are still coming in, and the results are great.
Yeah. And what do you say to people that find it hard to invest in stocks because it makes them nervous?
Probably they are choosing the wrong stocks, and they have to focus on quality. And also give it some time, because that's the beauty of compounding.
Yeah, no, true. And we'll get back to that beauty of compounding a little bit later, because I think we have a nice full pack show today. We'll talk a bit about the news in the week. We will then also talk a little bit an article that you brought forward that you really would love to talk about, the art of selling or of not selling. Yeah,
actually, it's the art of not selling.
Exactly. And then we'll talk about 3 Spanish dividend stocks that we felt like we just have to talk about, also knowing what our audience is asking about. And then we'll go through some listeners' questions. Okay. So if you don't mind, maybe we just get started about the news of the week, because Boveda inversion, EMAC and Esteves have been asking, of course, about Hershey, knowing that you like it so much as well, and also knowing that I like to talk about CEOs on the podcast. It's not so much that I like to give them airtime, but sometimes they deserve
Yeah.
airtime in both positive or negative ways. So
Mm.
maybe about the news, we knew already for some time that Michelle Buck will leave the organization. She's retiring.
Mm.
But now we know that Kirk Tanner is joining as CEO Hershey on the 18th of August, if I'm correct.
Mm.
And he comes from the company Wendy's, the burger chain. What are your thoughts about this one? And then maybe secondly, why do you like Hershey so much?
Yeah, I'm going to start by the end. I'm going to start why
That's
I
good.
like Hershey so much. So I think it's a great brand, especially in the US. I mean, it's the most known chocolate company in the US, and they have a lot of pricing power. I think it's a very capital efficient company, and it also has this is something very interesting because it has the Milton Hershey Trust behind, and they have a controlling stake, and they are not able to sell. So they are Mondelez tried to buy it twice, I think, and also Nestle, I think, and it wasn't possible. So that's good for the stakeholders because now that the price was depressed, Mondelez tried to buy it, and they didn't allow it. No? So that's, and also I think the Pennsylvania state is also involved, and they try not to keep it local, and I think it's a great company. For me, it's my favorite company actually.
So I also own a lot of Hershey, and I
Mm,
actually doubled down when the price went down because how often do you see Hershey trading above 2.75% yield? If you just take the historic yield into consideration,
mm,
I bought it for the first time when it was at 2.75% yield when it was trading at $100. It's
mm.
now I think still trading $165.
Yeah.
It's a large position, yet still 2% only in my portfolio, but that's because I have a lot of companies. But I deployed a lot of cash into it, and for the same reasons as you, they have a great takeover defense mechanism.
Mm,
The Hershey Trust defends on dividends. The
yeah.
growing dividends there are much in line with what we seek as a shareholder. I even interacted with investor relations about this because they don't have a clear dividend policy on their website. So I just reached out, and it was kind of the same answer like, well, we can't promise. Incentives are pretty much aligned.
Mm,
And besides that, I think why, the crowd typically responds to price action. But
mm,
yesterday I looked up the cacao prices. They dropped a little bit, but they're still at historic high. They're still 4 times more than they were probably like a year or 1.5 year ago,
yeah.
which is absurdly high. So there are some headwinds just that are making short-term investors getting rid of the shares then, right?
Mm,
But as a long-term investor, yes, it will suppress the margin, but I don't see the company going out of business with that. The only criticism I have a little bit, but that's not something new,
mm,
is are they able to retain shelf space when YouTuber influencers like Mr. Beast are competing? And for instance, here chocolate costs maybe, what is it, €2 for a nice bar, €2.50 for a chocolate bar.
mm,
This stuff from Mr. Beast costs five euros in the shops here. But I
yeah.
tell you, my kids, if they go to the store and they have an opportunity to choose, they want the Mr. Beast stuff because it comes from Mr. Beast.
Mm,
So that's the only worry I have a little bit, like, how do they do with shelf space? But on the other end, kids trends come and go.
yeah.
Hershey has
Yeah.
survived a lot of this kind of competition.
Yeah, and I heard that trend is slowing down because at the beginning they were taking a lot of shelf space, but now I think it's slowing down and Hershey is recovering.
Yeah.
And about the change of the CEO, I think that Michelle Bock had a bad timing, but not her, but she was bad. She had bad luck because there were different factors that affected external factors that affected the stock price. for example, the capex was higher than the historical average of the company, and this is normal in consumer staples. From time to time, they have to spend more. And the historical average is like 3% capex versus sales. And it was she started in 2017, and around 2020, they increased the capex versus sales to 4.5% or something like that, and for a few years. So she had higher capex. She had the GLP-1 drugs like Ozempic. Then what you were saying, record cocoa prices, and also the consumer weakness and inflation in the US. So I think there were a lot of factors that affected the stock, and they were not related to the management. But
are you suggesting the market is not happy with her because the official announcement is that she is retiring?
Yeah, I'm sure that's the official announcement, but I'm sure that there's something else. Yeah.
Yeah.
And
but if we then go to Kirk Tanner, right?
Yeah,
I looked him up. It's quite an interesting story.
Yeah. I mean, he was the CEO of Wendy's, as you were saying, and it's true that the stock hasn't performed very well. But I mean, most of the restaurant stocks haven't performed well lately. They have struggled a lot, and
40%
other than McDonald's, McDonald's is the only one probably that has performed well. But we know that McDonald's business is not only the restaurant, right? And but he comes also from PepsiCo. He stayed there like 30 years. He was actually the CEO of North America, and also from P&G, from Procter and Gamble. So I think he has more experience in consumer staples than in restaurants. So I'm sure he'll do a good job, because actually in PepsiCo, North America, the North America division is the most profitable division of PepsiCo, and I think he'll do great in Hershey.
Yeah, maybe you can pair up a little bit with PepsiCo, because if as a man, if I go to the store and I buy some chips from Lay's, if the chocolate is lying besides it, I can buy something for my wife as well. I know it's very stereotyping, but I see some synergies there when it comes to supply chain and promotion.
Yeah, but actually Hershey has been investing and in salted snacks also.
Yeah.
And I think that's a trend, because also today we heard the news that Ferrero Rocher is going to invest in
Kellogg's.
Kellogg's. And also Mars announced that, a few months ago, announced that they were buying Kellanova, which is the spin-off of Kellogg. So they are also investing in salted snacks, and I think that's a good diversification. But also, if he'll do a joint venture or something with PepsiCo because he knows the business and he knows the management. So probably he'll do some alliance or something like that.
But let's say like that, there is an unmet need to society, because some old-time listeners know that I'm more towards a vegan diet for health reasons.
Yeah.
But I love snacking. You know how hard it is to find healthy options, and it's not about the money. It is just a healthy option, even if it's processed. I mean, you can make vegan chocolate, right? Somehow they don't sell enough of it, or it's too expensive to produce. But if there would be just like one option in the shop for a little bit of a compatible price, that's what I would want to buy. Yeah.
Yeah.
Now I'm often skipping it and just think, okay, it's not good for me. Just move on. Yeah. So there is an unmet need in the market, and I think the one that figures it out is a company that can do it at scale will be able, I think, to sell a lot, because also a lot of people around me here, like also women a lot in their 40s, they are looking for healthy stuff, and we know much better now how the sugar and everything leads to our diseases, Western diseases like cancer, diabetes, and everything. So anything that can help there will be helpful, I think. So but fun fact maybe for the listeners, because you see the picture in front of you. The moment Kirk I mean, I'm sorry, I have already this Star Trek thinking, Kirk Tanner, like,
Mm.
yeah. Anyway, the moment he came to the company, it was trading at that moment in time around $19. It's now 11.40. It's near. It's almost with a one or two cat bounce beats. It's like a straight line down. It's.
Yeah.
I don't think he enters the company with a lot of self confidence,
No.
knowing that his options from Wendy still need to expire, I guess, and come in.
Yeah, but I guess Hershey's stock is already depressed, and I
Yeah,
think
only way
he,
is up.
yeah, and as I was saying, he has more experience in consumer staples than in restaurants, so I think he'll do fine.
Yeah, I hope so as well, as a shareholder who has a lot of money invested into it. So
And also, for me, Hershey it could be run by a monkey. I mean, that's
yeah.
what Warren Buffett always says, right? You have
Mhm.
to invest in companies where even
Yeah,
a lunatic can run it.
I know, and we have enough. And as soon as the dividend comes at risk, the foundation will be changing the CEO quickly, I think.
Exactly.
So good combination to be co-invested with it. Like you, I really like Hershey, and
Hmm.
I think it will do well in the future.
I'm sure.
Then the second news item that we have is also about Starbucks. Yeah, and
Hmm.
they are considering selling their China arm. I believe what you also mentioned, like maybe not entirely, but like kind of opting in a deal with it.
Hmm.
What are your thoughts about that one?
Well, I read that it was only a minority stake, so they
Hmm.
are not selling the control. So probably they
Yeah,
want to bring in a local partner
yeah,
that knows the Chinese market better, or probably they have more relations.
yeah,
And also the price they are offering, it sounds pretty good. So
yeah.
so I think it's going to be a good thing for Starbucks.
Interesting. I think it was Howard Schultz. I listened once to an interview with him about it, where Starbucks was one of the first companies entering China and really doing a lot of business there.
Hmm.
They have 7,500 stores, right, as per the annual report in 2024. So that means 1.3 million per store. That's kind of what this deal would mean
Hmm.
there. I was also checking and I understand why they want to take action. The store sales declined by 14%, which is a lot. I also know that Lurken Brands, yeah, the coffee company there, the coffee house, is very popular there. Very much on the pricing.
Hmm. Looking
I think
coffee, right?
already, yeah, Lurking Coffee. I think
Hmm.
already more than double the store count of Starbucks. While the company's relatively new,
Hmm.
they had a bookkeeping scandal,
Yeah,
if I'm not
that's true.
mistaken.
Hmm.
But clearly, and there's a large anti-America sentiment with all the geopolitical tensions.
Hmm.
So there needs to be something done. And then we also know that Brian Niccol, the new CEO of Starbucks, he said very clearly, I need to focus on turning around the US. That's where
Hmm.
the big money is being made. So international and then China also will not have his priorities. So I understand it's actually quite smart to maybe do a deal with someone where you kind of, I don't know, have revenue sharing, however you want to call it,
Hmm.
with someone that just wants to focus on it, if that's the case. But for investors, what I've seen over the years, the China growth was always part of the bull thesis, saying American growth is slowing down, so it will come from China.
Yeah.
Well, that's interesting, right?
Hmm.
What this does to the bull thesis of people.
Hmm.
Um, I find it a little bit disappointing, honestly, that China is not able to compete. Sorry, that Starbucks is not able to properly compete with companies like Lurken. But I hope that such kind of a deal that they're stroking could be helpful. I mean, I did a back on the napkin assessment. If they make so the China business makes about 3 billion in revenue.
Hmm.
That's 8.3% of sales. They come with lower margins. The estimate is that China comes at around 7% profit margin. On a profit of 3.2 billion, this would be 224 million. So we're talking almost about a 40 multiple here, yeah. So that would be a very, very good deal, and it would expect a lot of growth in there or otherwise said, a lot of untapped potential that Starbucks probably is missing out on.
Yeah. Yeah, and also regarding looking coffee, I always prefer to invest in Occidental companies. I don't like to invest directly in Chinese or Indian companies
Yeah.
because I don't trust um, the. Yeah, it's difficult to trust the accounts and management and things like that. So I always prefer to have exposure to these countries through American or European companies.
Yeah, but if you go through the average dividend stock portfolio, you have it.
Yeah.
Because the big pharma companies typically sell in China, China as well. Technology stocks, Apple, I believe, as well.
Yeah.
So there's typically in portfolios already a lot of exposure to the Chinese market. Unilever.
Yeah.
Yeah.
Louis Vuitton also.
Yeah, Louis Vuitton. So you don't need to invest directly. I fully agree.
Yeah.
Yeah, it will be interesting. I mean, Starbucks is, I think, is still a lot of potential. I was the other day at a Starbucks in America. I was quite disappointed that they stopped the personalization with the name on there. It kind of lost a little bit its soul just to have a sticker.
Yeah.
But then I asked the barista, and she also said like she would love to see it back again. And I asked her, why do you have it then? Yeah, too busy. I said, yeah, but your shop is empty at the moment. Oh, it wasn't empty, but there were many people sitting there. They were drinking, but I was the only one ordering at the bar. So there was not an issue with just taking a pencil and putting my name on it.
Yeah, that's true.
So they need to fix this. They need to fix this.
Yeah. Here in Spain, most of the stores are always full. I don't know in Poland or the Netherlands.
In
But
Poland, they're also full enough. I was the other day in the airport in the Netherlands. And well, in the airport, it was actually closed. But in the, let's say in Amsterdam, it was full.
yeah.
So I think in Europe, Starbucks is actually doing quite well. It is still, although we have a lot of coffee houses here, I do just still, I still see it as a meeting place for people. But maybe in America, they have a lot of stores that are like pick up via the app and everything. And that's also what the CEO was complaining about, like, or how it shows that you lose the identity if it's only like an app interface and you run in, while Starbucks was always growing because of its community feeling. And I think in Europe we have this community feeling still a lot, in the sense of, yeah, let's meet at Starbucks for a coffee. You sit there for an hour and you chat. Yeah.
Yeah, I read the Howard Schultz letter that he said that they were losing their identity, right?
Yeah, and I can sense that.
Yeah.
The few shops that I've seen, I can sense why this is in America a problem, but I don't see this, to your point, in
Yeah.
Europe.
Yeah, but actually, that's the point that Starbucks sells the experience of going to or used to sell that, the experience of going to a coffee shop more than the coffee actually.
Yeah. I think for coffee we'll go to a local specialist somewhere.
Exactly.
Yeah. Good. So hey, maybe before we go then to the one of the main topics there, just really quickly for our listeners, Games Workshop has declared a 85 pence dividend, the first dividend this year. I want to mention to people that the dividend is lower than last year this time, and the last dividend also. Many people like Games Workshop, they like the products, but like we always say, there's an irregular dividend payer that while the business grow, you can expect the dividend grow, but the business doesn't grow in a straight line. So it's very much volatile dividends. Then General Mills hiked the dividend by 1.7%, and also Target recently hiked the dividend by 1.8%. What are your thoughts about that? It's like two low hikes, right?
Yeah, Target it doesn't surprise me because they are struggling.
Yeah.
A lot, and General Mills has been slowing down sales also. But I like General Mills actually, and I have it in my portfolio. I don't have Target. I have Walmart, which has been doing pretty well.
Yeah.
And regarding retail stocks, I like Costco, but it's impossible to buy it.
Yeah. So I own Target. I bought quite a lot of it as well on the dip. And I also visited Target when I was in America. There's nothing wrong with these stores. It was quite nice to do a a stock safari there. What I like about Target is actually that they just did a 1.8% because you get to buy it now at what is the yield? 4% or so, 4.2%.
That's high.
Historically very high.
Mm.
And they just have a 50% payout ratio. They could easily do 7 or 10% dividend hike.
Mm.
That's what many CEOs do when they have bad earnings. They try to, score points with the investors by a large dividend hike. I rather like that Target is not doing that. They have more than 50 years, and this builds a little bit of confidence for me. Like this is a cyclical company. Because of the inventory that they have, they are more sensitive to the consumer because they sell effectively everything. They sell Nintendos, TVs, everything. So they are more subject to the cycle compared to Walmart, because Walmart is a little bit more budget oriented, let's say. Yeah. So I think that is what you want, right? A company that follows then also a little bit the cycle, but protects your income. And in this case, you could argue if the inflation is 4%, okay, maybe you lose a little bit, but they just hiked the dividend, I think 2 years ago, 15%. So I mean, if you take the average, you're doing quite well with Target's dividend growth, and the dividend seems very safe still with the payout ratios and everything. So
yeah. And also, if we look at the hikes that we had last July, I mean, in the previous year, we'll probably have the same. Like we'll have Unilever, Diageo, Kenvue, Union Pacific, Mondelez, and probably Reckitt also.
Yeah, exactly. So, I don't expect a lot of dividend hikes. The supply chains have been very much interrupted as well with tariffs. So I really would expect them to be conservative.
Yeah, actually, Diageo announced in the interim that they wouldn't increase it. So probably they would do the same.
I'm not surprised. Do you own Diageo?
Yeah.
Yeah. What are your thoughts about it? Because I'm quite bearish on them. Well, already for years, right? Before the whole decline in alcohol consumption, because I saw that Diageo was already for years leveraging up and are weakening the balance sheet. And I didn't understand why it was needed. And that was for me a bit of a sign, like, why are they doing that? And then alcohol slowing down, because that's also the reason why I just haven't bought it yet. Because if you look at the price from a year ago, it looks very attractive. But if I just look into the business, I don't see it so much, Eloy.
Yeah, but I think Alberto explained that in your podcast that after COVID there was a lot of inventory. The inventory went up, and also in the US, the distributors are the ones buying it, but they have huge inventory, so they slow down. But I think it's going to recover, and I really like the stock, and I've been buying actually.
Well, I like their products, and I hope it will do you well, Eloy.
Thank you.
And I hope I'm wrong with that. It's the same that I have with Nestle, where I saw that Nestle was leveraging up the balance sheet, and I'm a bit allergic to this kind of behavior. I know what Alberto said with the inventory, and I need to look at my own writings from 2 years ago, but I just saw the balance sheet deteriorating, and I wonder, like, why? The management could have been much more conservative, I think, with the dividends at the time. Yeah, good. Hey, last dividend hike. It's a company we don't speak a lot about, but it's a proud European dividend aristocrat in the Noble 30 index, and that's Halma, the English one. They listen to this. We achieved our 22nd consecutive year of profit growth and delivered our 46th consecutive year of dividend growth of 5% or more. A dividend of 7%, dividend hike of 7% this time. That's amazing, right? 46 years of consecutive dividend growth of 5% and more.
Yeah, not bad.
That's chapeau. I don't think any European company can say that.
Yeah,
I don't know of anyone. Nestle has more years of hikes, I believe, but they can't claim this kind of track record.
Yeah, I don't know L'Oreal how many years they have.
L'Oreal had also a flat year, so we're talking more about on average, right? So L'Oreal had a few flat years.
Yeah.
For instance,
true.
during COVID, I believe.
Yeah. But that was partly because the French regulators obliged them mostly. No?
Yes, there was a lot of pressure, but
Yeah,
I mean, yeah, we can blame the French, like we always do in Europe. But on the other hand, I mean, it's a company's choice to some extent where they want to be listed, right? There are
yeah,
companies that went international, so it's
that's true.
nothing stopping L'Oreal to go to the UK,
Mm. That would be great for
except
the dividend.
except for their heritage. Yeah, that
Yeah,
would be great for the dividend tax.
yeah.
Yeah, maybe we should just move all the French dividend stocks to the UK.
Or all the European companies.
Exactly.
Yeah,
We will all do a Brexit and we'll join the UK.
yeah,
Yeah, good. Hey, maybe this is a nice topic then to start a little bit talking about The Art of Not Selling by Chris Cerrone.
yeah.
I'll let you introduce it a little bit, but I really like that you brought this topic up because you listen to some of the shows, right? And I always say, like, for me, selling is one of the hardest.
Mm.
And actually, I think it's a gift, and we can discuss also a little bit more why.
Yeah.
So yeah, please tell me, actually, what is it about, and why did you bring it up?
Well, this is a great thing. Chris Cerrone used to work for Acre or Acre
Hmm.
Capital Management. You know, Choc Acre,
Hmm.
and this is a for me is this writing is a must for every long term investor. So if probably you can share it in the link or something of the
Yeah, I will
podcast.
do that. I will add it to the podcast description and link.
Yeah. So here in this writing, he doesn't work anymore there for Acre Capital Management. I
Hmm.
don't know where he's working now. Actually, the article was at the webpage of Acre, but now it's
Hmm.
not no longer. So basically, he emphasizes the importance of long-term investing and the dangers of selling too soon. And basically, the key points include that compounding is king. So the power of compounding is best realized over long periods. We all know that.
Hmm.
Actually, he puts the example that if you double a penny every day
Hmm.
during a month, you get up to 10 million
Yeah.
from 1 penny. Yeah. So, obviously, selling prematurely interrupts this process and undermines potential exponential gains. No? He also talks about avoiding distractions. So, you have to tune out political events, macroeconomic trends, everything. And even valuation, you shouldn't consider only sell because the valuation is high, right?
Hmm.
Instead, you should focus on the business and fundamentals. So that's basically his. And he also talks about when to sell. So valid reasons to sell include slow growing, obviously, loss of competitive advantage, deterioration in management quality, and sometimes reallocating to a clearly superior opportunity. But that's
Yeah.
rare. So basically, the only way to sell is when you have deterioration in the fundamentals of the company.
So interesting take. So what about Pepsi today?
I'm buying Pepsi actually because I think
But are they still growing at an above average rate? What he's claiming?
not really, but I think they are going to recover.
Yeah.
And also, they are investing a lot in capex to grow
Yeah.
internationally, and I think that's going to help in the future.
Yeah.
When
It's one reason why I haven't sold Pepsi yet is that I also learned to respect compounding over the
yeah,
years. But on the other hand, I have also decided not to double down on it
mm,
because and that's why the price is low, right? The price is low because the company slowed down, and now is the question mark: will they be able to grow again while the cash flow is so high? I don't see a lot of signs, so I'm curious to hear also where your signs come from.
mm,
But generally, well, so I think um, the not set. So I made mistakes with selling. Let's say thinking because he talks about it, thinking that the valuation
mm,
is too high. Well, actually, he says like from his experience, most of the times when valuations feel high, it is because they're just beating expectations all the time, and it would be not wise to interrupt the compounding in those moments in time. Yeah, so you're just underestimating the power of the business. That's
mm,
what he's effectively telling us. And a great example for me is Microsoft. I always felt like Microsoft is too expensive, but then on the other hand, I have Apple.
mm,
And Apple, I started selling like 1/3 of my position because I felt like, yeah, the growth is gone in Apple and I can see it. I understand the technology, I understand the product,
mm.
and I see the saturation. And then paying a 40 multiple makes no sense anymore. And this is where I think where it comes like this question is it still growing at an above average rate? It was doing that for many years, but I don't see that opportunity really anymore for Apple now
Yeah,
because it's lacking product innovation, while Microsoft is still bang on with a lot of product innovation.
yeah,
um, yeah, so but generally speaking, I only sell with a dividend cut, or when the signals are so red everywhere that I would expect a dividend cut. Then I don't need to wait for the dividend cut anymore, right?
exactly.
But
But
what is your
regard,
interpretation on it when it comes to your own investing style of the art of not selling?
yeah, but for example, coming back to
Yeah.
PepsiCo, I think what's happening to PepsiCo is similar to what was happening to Coca-Cola like
Hmm.
10 years ago. Remember when we
Yeah.
were in the podcast, Alberto and
Yeah.
myself?
We're having this
We
discussion
had the
about it.
discussion, and I think you and Derek were saying that PepsiCo had done much better than Coca-Cola
Yeah.
because at that time it was the case. But
Yeah.
Coca-Cola was doing some restructuring and
Yeah.
refranchising the bottlers. So I think now it's something similar. PepsiCo is doing like a transformation, and I hope they are going to recover.
Yeah. But isn't also still? I mean, yeah, we can go deep onto this, right, with Coca-Cola as well. But still, the multiples are crazy for Coca-Cola, right? For the growth that it's
Yeah,
showing.
but
So
have you
this
seen
is
that?
maybe what the whole article is about.
Yeah,
Yeah.
have you? Yeah, but that's what Chris Cerrone is saying in the article that
Yeah, yeah, that's
that
what I mean. That's what the whole article is about. Don't
that
interrupt the compounding.
don't also, you don't have to sell because the valuation is very
Yeah,
high. Yeah,
yeah, yeah. But
and
you also
also
don't need to buy them, and that's also
yeah,
what he mentions, because usually you would not buy them at those prices, right?
yeah, and also I was reading an article like 1 month ago that since COVID, Coca-Cola has increased prices every quarter except 3 quarters since
Yeah.
2020, and those 3 quarters were at the pandemic. So
Ah, nice. Yeah,
yeah,
yeah. But
so
there's
they have a huge pricing power, and people still
mhm,
consume it. So
yeah. Yeah, what I also liked in this article is that the guy is saying, because, for instance, yeah, about valuation feels to you wouldn't buy it at that price, right? But
yeah,
why sell?
exactly.
Let your money work, yeah.
Yeah,
But it's interesting because what he is also saying, like, if you sell because of the valuation, what do you buy back for it? Because the whole thing is like, oh, and the same applies to us. How many dividend growth stocks are there in a month that are at your radar, and secondly that you are convinced to buy at that price? Is it
mm,
one, two, three, four maximum?
yeah.
Four
It
would be a
depends of
lot,
the
right?
it depends of the time, but mostly you
Yeah,
have 2 or 3 or 4. Yeah,
exactly. I would say 11 out of 12 months we're
mm,
looking at 2 3 stocks per month.
yeah,
Just large April we would have found maybe 15 or 20, but
mm,
that's more like an exception than the rule. So
exactly.
yeah, if you're going to sell one of your best compounders, and what people also need to know is like, when a stock is doing well,
Mm,
it is it's logical that the multiple increases.
mm,
Yeah, because there's growth, so expectations raise. You don't, if a company was, you bought it at a 10 multiple, and the company was then growing 3% per year and then starts to grow 10% per year, you shouldn't be surprised that it triples the valuation because of just multiple expansion,
yeah,
because suddenly people want to pay up more for the profit.
mm,
Yeah, and that's also important here to consider that there are a lot of factors in that play a role. So, but what do you buy back at the time? Yeah, if there's almost nothing there in a month, like 2 3 stocks.
mm,
So this is what Derek and I always say: let your winners run.
Yeah. That's what I always say too. You have to let your
Yeah,
winners run. Yeah.
yeah, yeah. Interesting one. And when is it that you sell dividend cuts? Is that it, or something else as
Yeah,
well?
mostly dividend cuts, and when I see a clear deterioration, or when
Yeah.
I hear about an accounting scandal or something like that,
Oh, yeah,
that's
yeah.
a sell
And
decision.
then we have an interesting question from
Hmm.
Sebastian,
Hmm.
and he says actually, why don't we buy dividend dips? A cut isn't a cancellation. What if the company starts growing its dividend again next fiscal year? For instance, 3M is a good example here.
Hmm. Yeah, 3M. I didn't sell it
Hmm.
because I think it was something. Well, probably it was. I don't think it has anything to do with management, but it was more.
Yeah,
Well, yeah, it depends,
it
but
depends on how you look at it.
yeah,
Maybe not current management.
yeah, not current management,
No.
but also I think it's a great company, but it was involved in different scandals.
Yeah, the
And
PFAS
yeah,
most notably.
yeah, and also the hearing,
Yeah, the earplug of
the
the
airplugs. Yeah,
army combat.
yeah.
Yeah, yeah. So I sold it at the time, but it was opportunity cost.
Mm,
So first of all, because I saw the dividend being cut, but then NN Group was there, the insurance company that I could pick up for 7% yield.
mm,
And yeah, in hindsight, it was a good take. Even though 3M's share price recovered a bit,
mm,
and that was just a much better opportunity to redeploy my money there.
yeah,
Yeah, interesting. This is also so nice, right? We're both kind of seasoned dividend growth investors.
mm,
We think different about Diageo. We think different about Coca-Cola. We think different about Pepsi.
mm,
I think that's the beauty of the stock market. But I would say both we are kind of on track to reach our destination of
exactly.
getting there. Yeah,
Yeah,
very interesting. Because often people think there's only one truth or something like that to get there. And I would even so if we put our principles together, we'll pretty much end up with similar principles, and we still look at the same company coming to sometimes to totally different conclusions.
exactly. Yeah, that's the beauty.
Yeah, exactly.
Mm,
Good, good, good. Hey, shall we talk a little bit about three Spanish dividend stocks? Because you're from Spain,
yeah.
uh, author of Cartas del Dividendo, right? And a lot of people having expectations towards your knowledge about dividend stocks. So
Yeah,
I just want to know, like, yeah,
actually, I
go on.
only own three dividend stocks in Spain.
But those are the
So
best ones, right?
for me, those are the best ones, but there are
Exactly.
others. Yeah, but the Spanish market is really concentrated in banks, and I don't
Hmm.
invest in banks. We also have insurance companies, but they are not. Well, we'll talk about MAP.M later
Yeah,
because there's a question.
yeah.
Um,
But how would you characterize the Spanish economy or stock market? I always had a feeling it's energy heavy,
yeah,
electricity heavy, and such. So infrastructure heavy. Let's call it
yeah,
like that.
yeah.
Is that correct understanding? And then banks to
And then
to
banks,
manage
yeah,
the systems.
mostly banks, energy, and that's about it.
Yeah. But do you have
Yeah.
any technology IT startups or something like that? Like in the
No,
Netherlands, they have AGN, the payment processor.
no. In Spain,
No.
we don't have any technological stocks. I think.
Okay.
Mm.
Yeah. Yeah. Okay. Well, you have a lot of sun, so you can provide a lot of solar energy to the rest of Europe.
Yeah, that's why I own Iberdrola, for
Exactly.
example.
Wasn't that a nice bridge?
Yeah. So I own Iberdrola, Inditex, and
Hmm.
Viscofan. Viscofan is less known, but I'll
Yeah.
explain what they do.
So tell me, why Iberdrola?
Well, Iberdrola for me is a very well managed company, and
Hmm.
also I own it like since I don't know 2013 probably.
Wow.
Yeah, so my average price is €4, and now it's like
Oh,
I don't know for more than
15.
15. Yeah, so yeah.
Yeah.
Also
Good for you.
because they pay a dividend that you can collect in stocks, so that's
Yeah.
why my average share price is really low. But then,
Actually, yesterday I assigned
yeah,
the script to me that I want to have it reinvested.
yeah. I used to reinvest it always, but now I have it's like in my top 5 positions, and I
Yeah,
don't think it's such a good company to have it on top. So I like
yeah.
it, but I prefer others. So
Why not? What is it? What is not that it
well,
deserves it?
at the end, it's a utility, and it's true that the dividend hike has been really good in the last 5 years, probably like double digit, I
Yeah,
think.
yeah, yeah.
Yeah, but at the end,
But
it's a utility, and I don't think it's going to be able to grow like this forever. But I think
no,
it's a
but
very
there's such a strong catalyst in this company.
yeah,
Yeah, I mean, we need clean energy, and this company is Europe's, I would say, best company, best positioned
yeah,
for clean energy.
yeah, and it's also very well managed. Yeah,
Yeah.
mm,
Yeah, because what we want in Europe, we want less in energy dependency on other countries.
mm,
They really help with this. I think it's the hydrogen, but then the solar. So the mix of renewables that we have today is around 20% in Europe,
mm.
and Spain with the sun and everything that it has can really be I said the plug of Europe when it comes to electricity and stuff. I know it isn't there yet, right? I think, and we saw you had the blackout not too long ago in
Yeah,
Spain as well. So there's stuff to do there.
and
But
that was
if any,
basically
yeah,
because they were using a lot of renewables, and something happened, and
yeah,
we had a huge blackout for like 7 hours, a national blackout. It was the first time that this happens,
yeah,
but it was partially due to Red, Red Electrica. Now it's
yeah,
called Redella. They are
yeah.
the owners of the infrastructure, and
Hmm.
it was partly their fault, and they have been lacking investments. So
Yeah.
yeah,
Yeah, you have you have the Europe's Green Deal.
mm,
So Europe is targeting renewables of up to 45% by 2030, which would mean doubling. Yeah.
yeah,
More than doubling from where we are today in the next 4 or 5 years. So that's, I think, a very strong catalyst.
mm,
Um, then we have also the ownership structure. Yeah, it's a company that's actually not owned by the government. I think it has the Qatar Investment Authority for about 9%.
yeah,
BlackRock is in there, and Norges Bank. So Norges Bank is this, I would assume, the wealth fund,
yeah.
which is quite unique for a utility to not be owned and controlled by the government as
Yeah, I wouldn't own Iberdrola if it would be owned by the government, because I don't like to have the
hmm
government as my partner. Actually, that's why I sold the Nagas and Red Electrica, because the
yeah.
state has like 20% of the company,
hmm
of both companies, and I decided to sell because actually not only because of that, because also the
yeah.
dividend was cut, and the fundamentals were deteriorating.
Yeah.
Mm,
Yeah, and then also they are generating about 2% of return on capital employed above the cost of capital,
mm,
which is it's kind of what you look for as a minimum for value creation. So
mm.
that's not easy for utilities to have a return of capital above the cost of capital. Usually it is like borderline
Yeah.
there. So they're doing that quite well. I find the balance sheet also quite good. They have a BAA1 from Moody's,
Mm,
which is, I would say, for utility quite well financed, and they're just investing a lot in the future
mm.
at the moment, right? And building up the network, the facilities. And what is so impressive that all those investments they can do it almost all via net FFO, funds from operations,
Yeah.
which is like effectively that the profits are paying for it and there's still money left for dividends,
Yeah.
which I think is quite unique. So for me, it means that this company has a lot of tailwinds ahead of it. So I own it as well.
Mm,
It's a company I was really buying a lot from. I would say over the last 12 months, specifically when it dipped to €11, I had the opportunity to quickly buy some and to
mm.
initiate a position.
Yeah.
And Yeah, the dividend is impressive, right? 16% hike just so.
Yeah, and also they are diversified in different countries. They have
United
subsidiaries
States.
in the
Yeah.
United States, in Mexico, in the UK, in Scotland,
Yeah.
they have a lot of
Brazil.
Brazil, yeah,
Yeah.
and
I think they had a bit of an legal case in Mexico, I believe, because they didn't feel very comfortable about a foreign company
hmm.
having such a large influence on the network. I don't honestly know.
But
I
will
will
the
need
end,
to research
I think
what came out of it.
but
Yeah.
I think it was a good business for Iberdrola because what they sold to the Mexican government, because it
Hmm.
was like
Yeah.
a forced sale.
Yeah.
It was like the traditional business, like
Yeah.
the utility business, but now they are investing in Mexico for renewables, and that
Exactly.
wasn't um, bought by the Mexican government. So I
Yeah.
think at the end it was a good business for Iberdrola because they got rid of the old business and now they are investing in new businesses.
Yeah. And I'm a oil boy, let's say, right?
Mm,
I'm really a big fan of oil, but I'm also a big fan of renewables done
mm,
right.
yeah.
I'm not blind to the fact that we need more dependency on renewables.
Mm,
And to some extent, you could argue that the geopolitical headwinds may actually be a nice time to really explore this one,
mm,
because you might actually find some companies that are beaten down with this. But for me, Iberdrola really stands out. There are not a lot of utilities that I want to own or that
mm,
I even own. It's only Iberdrola. It's the only one that, also compared to all the Americans,
yeah.
Iberdrola is the only one that I feel comfortable owning,
Mm,
because I understand the European market well enough, less than the American market, and I just truly believe that we need this much more, and
yeah.
I think they're well positioned.
Yeah. Actually, every time I have looked at the numbers of American utilities like SO Company or
Yeah,
Duke or whatever,
yeah.
they look horrible. I mean, they have
Hmm.
negative free cash flow and they have, I don't like it.
No, me neither. I have the same, and therefore this one's quite.
Yeah.
It's a bit pricey, I would say. Would you agree?
Yeah. Now
Yeah,
it's
it's at the
pricey.
moment it's run a bit up. Yeah.
Yeah.
But the risk, of course, here is that Iberdrola becomes too important
Mm,
for Spain, and that the government starts to put control over it, right? And they just say, like, you need to sell this, or we need to get a stake in this company because it's of national security.
yeah.
I would like for everyone to understand, because I'm quite bullish on the long term prospects as a company.
Mm,
We have seen in the history that this can happen, that they can get nationalized for a part. We don't want to have Iberdrola causing a blackout or something like that, and then the news becomes because of their greed for profit or something like that. So we shall need to nationalize it.
yeah. Yeah.
Yeah. So yeah,
Mm,
I would also say that a collapse in commodity prices can hurt the business,
mm,
because they're dependent on that.
mm,
And last but not least, I think another risk is that needs to be considered is a bit of interest rate. I know we're already on the high end,
mm,
but it doesn't mean it can't go higher. Yeah, and I just mentioned about the cost of capital versus the return.
mm.
There's not too much wiggle room. If it goes to 7% interest rate, the company may have a little bit of an issue in refinancing and such, or to make it profitable. Let's call it like that.
Yeah.
Yeah.
I don't think we're going to have interest rates at 7 in the short future, but you never know.
Exactly. That's what I think something to be aware of with these companies
Mm,
that are so cash flow sensitive and
yeah.
so much also rely on debt still.
Mm,
It is always an elevated risk. The same for real estate investment trust.
yeah. True.
Yeah. Good, good, good. Hey, how about the second one then? Inditex?
Well, Inditex has been a huge growth company. Now it's starting to slow down its sales because it's difficult to grow like that. And also, they have a change in management because it was managed by the founder Amancio Ortega.
Hmm.
Um, then it was I forgot his name. Now it's the president of Nestle, actually.
So the guy from Nestle went to Inditex. Oh boy.
No, actually, the guy from Inditex went to Nestle.
Went to Nestle.
Yeah. But I forgot
Yeah.
his name. I can't believe it. I'm losing my memory. Well, and now it's managed. Well, the president now is Mansi Ortega's daughter, Marta Ortega, and I think she's doing a great job. But the thing is that it's difficult to grow like they have been growing. But it's a very the balance sheet is very strong. They have like 10.5 billion in net cash. So
yeah, debt is low and equity is quite high. So there's a really, I would say, they have a very very strong business balance sheet, specifically for retail and fast moving goods.
yeah, I remember now the name of Pablo Isla. He's the president of Nestle. He was the CEO of Inditex, and he did a wonderful job there. Especially in the internal to go international. And I think I really like it, but I think it's going to struggle to grow like they have been doing from now on.
And what about tariffs? What's their reliance on Asia when it comes to the clothing?
Well, they have some of the clothes are made in China, of course.
Yeah.
Okay.
The thing is, the tariffs are towards the States.
Exactly.
Do they generate some money in the States, or is it a European?
No, they also have exposure to the States, but mostly it's Europe and the rest of the world.
Should be fine. So the main risk is then the logistics and the shipping there, where there are war zones right now.
Exactly. Yeah.
Okay. Yeah, I don't own it. It has always intrigued me, also as a customer from time to time. I remember very much that in the early 2000s, how Zara was up and coming. It was amazing to have like proper looking clothing for a decent price. Yeah, they really what Zara has done, the brand Zara, is quite amazing. They took a traditional industry with a fashion cycle of more aligned with the season, and they turned it into a fashion cycle of a matter of weeks. Yeah, they just create stuff. It's maybe there for 4-6 weeks, and they can move on already with the next batch, and all the time give customers clothes that it's hard when you go to Zara to buy something and go to a birthday party and you spot two others that wear the same. Yeah, and that's what Zara brought to the world, right?
Yeah, and they do that very well. Yeah,
exactly. They really invented, I would say, this kind of throughput and cycle times.
Yeah, at good
which makes it
prices
unique and at a low cost, I would say, right? And low price to the consumer. Yeah, true. So when you say like you don't expect it to grow so much going forward, does this influence any thinking on your side around the company or decisions?
No, I think they're going to continue growing, but not so much as they used to.
Yeah. Okay.
But I'm still happy with the company, and I think the new management is doing quite well, because they are also reinventing some of their processes, and they are including coffee shops at their shops. So
wow.
Yeah, they are doing
a lot to Europe, a coffee shop.
Yeah, they are doing a lot
Starbucks.
A lot of innovation, and also with Sarah Home and things like that.
Yeah.
Nice.
Okay. Hey, next one then. It's called VISCOFan. What about that? I think you guys discussed it also together with Alberto, but I must confess that I forgot about it.
Yeah, VISCOFan does the film that goes around the sausages. But it's like a monopoly. They sell all over the world, like in Brazil, in Mexico, in Spain, in China. And it's a much smaller company than Iberdrola and Inditex, but they also have grown their dividend a lot. Sorry, excuse me. And for example, in 2019, the dividend was 1.62 euros per year,
Yeah.
and now last year it was 3 euros and 10 cents.
Wow.
It's true that they include this includes a €1 extraordinary dividend, but they also paid that euro in 2023. So
does that more regular?
it's a more regular, yeah.
Yeah.
And I really like it's really well managed, and
Mm-hmm.
they also innovate because they are also doing some health because they I don't know how to call it collagen or collagen.
Yeah.
They so that's part of their product, and they are
Yeah.
also investing in research and development for heart diseases.
Yeah.
Yeah,
Well, if they're making wrappers for the sausages, they should talk to Durex, to Reckitt Benckiser, and
yeah,
say if they can collaborate, because I think they also have a lot of experience with this.
yeah, exactly.
Different usage, but
Yeah, yeah, and I think it's a very good company. For me,
yeah.
it's one of my favorite Spanish companies.
Top five?
Yeah, actually, I
Yeah.
only own three, so these three are
No,
my
but I mean top five in your portfolio?
no, no,
No.
no. But now
No.
it's at a reasonable price. I mean, the stock has been
Yeah.
going down,
Yeah.
and I think now it's a good time to add to my position.
Yeah.
Yeah,
So tell me, what is your top five in your portfolio at the moment?
I think I have Apple. No,
Mhm.
nowadays I think my top is Microsoft, then Apple,
Yeah.
then Iberdrola, then Hershey, and then Philip
Yeah.
Morris.
Ah, nice one.
Yeah,
Yeah, it's also interesting, right? With British American tobacco now,
yeah,
tobacco is in favor again on the stock market. It's
yeah.
quite impressive.
And also Philip Morris has been doing quite well.
Yeah,
Actually, all the
exactly.
tobacco stocks have been doing well. Yeah.
Yeah. So guess what my top five is then?
You also have Microsoft, I think.
Yeah, Microsoft is number one.
Yeah.
I mean, it's hard. At the run up to $500, it's now
Mm,
$501. I mean, it's amazing.
mm.
It's really amazing.
Then you have ExxonMobil, probably
ExxonMobil is, let me see, it is number six.
6. Yeah. Johnson and
Yeah.
Johnson.
No, that's number eight. You're
uh,
close.
I don't know.
Shell
Shell.
is number
Yeah,
two.
Shell. I remember. I remember it was an
Yeah,
oil stock, but it wasn't
yeah.
ExxonMobil.
What do you think is number three? Another Dutch stock.
Unilever. No, Ahold.
Ahold.L,
Yeah.
right. So number four is a pharma stock from America.
Um, AbbVie.
Yes,
Yeah.
AbbVie.
Yeah.
And number five is Unilever,
Yeah.
which is a surprise, Unilever, but Unilever yeah, no, it's just a surprise.
Mm,
I think it's because Unilever, AbbVie, Exxon, Mobile,
mm.
they're all the time like kind of switching positions for me. Like Microsoft and Shell as well, they're also all the time switching
Yeah.
positions.
Mm.
Yeah.
Good.
Yeah, nice. Hey, thanks for sharing those three stocks. Very interesting. So we spoke about Iberdrola, Inditex, and Visco Fun.
Mm.
I'll put the names in the description of the podcast if you're interested in it as a listener, and I'll also look up the tickers for that. So maybe this is a nice moment to go to the last part of the show. I see we're recording already an hour, so we'll try to go a little bit in a rapid fire through it. And yeah, let me get started. It's a warm up question for you, Eloy.
Okay.
Who will win the final, Paris Saint Germain or Chelsea? It's a question from Drip.
PSG, I think. Paris.
Yeah,
Yeah.
he's a Chelsea fan. What do you
I
think
know.
about it? Do you feel sorry for him?
No, but I think Paris Saint-Germain is playing quite well, and
Yeah,
actually they won the Champions League, so I think
yeah,
they are going to win.
exactly. What a season they're having, right? Amazing,
And
and that
also,
with
yeah,
without Messi.
yeah, and also they beat Real Madrid, so I think if they beat Real Madrid, they are going to beat Chelsea
Yeah.
also.
Are you a Madrid fan?
Yeah, of course.
Oh, it is not even a doubt. Good, good, good. Then Belle Dividends, our friend from Belgium, he has asked, I guess it applies to both of us. Have we ever considered moving to another country for tax optimization reasons once you reached FIRE, or
Mm,
in order to reach FIRE faster?
yeah,
He's currently considering to leave Belgium for this reason.
yeah. I have considered moving to Portugal, but
Yeah,
I don't think it's that easy because I think there are restrictions to move. At
yeah,
least in Spain, you have like a tax, like an exit tax that you have to pay,
yeah.
and I don't
Oh,
think, yeah, you have
yeah,
limitations to move to other European country if you're
yeah,
not moving for work. If you're more
yeah,
moving for example, to retire,
yeah.
I think you have limitations and you have to pay
More
a
and more countries are introducing exit tax.
yeah.
I find that I find it a punch in the face, Eloy.
Mm,
It's like you worked your life, you saved up, you're in the European Union, which should be an open market, a free movement of people and goods,
mm,
and then because for whatever political reasons, let's say, there is a group that is putting politicians in place that say like, oh, it's not fair that we have wealthy people,
mm,
and I come from a poor family myself, right? So I know how much sweat money
mm,
I have put in the stock market to have a better life. And I also know how many people in this place just continued having bad habits, bad money habits, other habits. And then they would, and their votes would then lead to me being punished for wanting to have a better life and do things different when I want to live somewhere else.
mm,
And even when I paid probably 2 3 times more tax than them. I don't want to make this a political podcast, but for me the exit tax, if you get that as a country, is really a punch in the face, I think.
mm. Yeah.
Yeah. Anyway, I have thought about these things, but I think I'm good in Poland. I like living here.
Mm,
I think the taxes are actually quite interesting compared to the Netherlands. They are much better here for me.
mm,
So if it would be anything, it's not for tax reasons. It would be for the weather. I
yeah.
could live in Spain, and Spain had this for some time. If you're a digital nomad, for instance, you could just write a newsletter. You could live there at very attractive tax policies, I believe, as well.
Yeah,
Yeah,
probably.
yeah, good. Um, well, we asked a question from Sebastian already about the dips, so
Mm.
let's go a little bit more to stock related questions. So late DGI investor is asking, what was the last stock that you sold and why?
At the end of last year, I made some housekeeping in my portfolio and I sold Verizon, Southern Company. I also sold Merlin Properties because there was
Hmm.
a potential change in the REIT
Yeah,
um, regime in Spain. And I think those are the last ones that I have sold. But I'm thinking of selling Medtronic also because Medtronic has been really flat, and now
yeah,
I think they want to do a spin-off. So I don't want to
yeah.
have another stock. So
No.
I'm thinking of selling it.
Medtronic is also on my cleanup list. I have a list for that,
Mm,
and actually I should have already sold it, to
yeah,
be honest.
yeah,
So it's maybe just tomorrow I just pull the trigger and
yeah,
because we are recording on Thursday evening and just get it out of my portfolio. To your point, it's dead money.
yeah.
It's not just the share price, it's earnings which are dead and
Mm.
and such. Cash flow is dead,
And also the
and
dividend
I don't
hike
see
has
this
been slowing.
changing.
Yeah,
Yeah, yeah. Well, they have to. There's
yeah,
no
I
way
know.
they can sustain a hike.
Mm.
Yeah.
So
No, I have the same. I lost conviction in the stock.
yeah,
I think they invented the pacemaker,
mm.
really did a great business, but now they struggle. And then I rather look at Thermo Fisher or something like that.
yeah.
Um, yeah. And then Alex, our dear friend Alex from Lithuania,
Mm.
living in Belgium, I believe, is asking, do you know any hidden Spanish gems? I guess Viscofan, right?
Yeah, Viscofan, also Vidrala is a very good managed, very well managed company, and
Yeah.
they do bottles of glass, and
How
they
do you write it? Bidrella?
Vidrala with a
Okay.
V, yeah, VID.L.
V, so
Okay.
VID.L.
VID.L,
Okay.
yeah.
Yes. Sorry, sorry for that's the Spanish English and the Dutch English.
Exactly.
Yeah.
Yeah.
VID.L. Okay. Could you ping me later the name? I will add it then to
Yeah.
the description as well for
Yeah.
them. Okay.
That's also a good
Um,
company. And there was an insurance company called Catalan Occident.
mhm.
But now I think they are going to be delisted because the controlling family is going to buy it back.
Buyback.
Yeah.
Wow.
Mm.
Wow. Good. Daniel Portella is asking what your opinion about MAPRE is in comparison to Aegon and NN Group. And I think I mentioned before the show to you.
Mm.
MAPRE, I remember them from the Tour de France. Wasn't it? How was the famous yellow jersey, Indurain? Didn't he
Yeah.
always have MAPRE on his t-shirt?
I don't remember if it was Mapfre, but it was, yeah, probably.
Yeah.
Yeah.
Is Indurain still like popular in Spain?
Yeah, of course. Mm.
Yeah, he must be a legend, right?
Yeah, he's a legend. Yeah. He won like
Yeah.
5 Tour de France in a row, right?
Yeah.
Yeah.
Yeah. And he was, I think, he had this German guy as a main competitor always.
Yeah.
They were all on dope, but I think there was a level playing field with Pantani and Indurain and all of them.
Yeah,
So
exactly. Yeah.
yeah.
Well, Mapfre is the biggest insurance company in Spain. It's
Hmm.
really well managed in Spain, but awfully managed internationally. So,
Yeah.
and actually, the dividend growth has been almost zero since
Hmm.
2007. So, I
Wow.
I don't like the company. I think there are
Yeah.
much better options in Europe.
Yeah.
I don't follow it,
Hmm.
and national Netherlands. I know you know it and you follow it.
Yeah.
But in Europe, I have Allianz, I have
Hmm.
Munich Re, and I have AXA also.
Yeah. Yeah.
And I also have
There's enough. There are enough better stocks out there. That's what you're saying, right?
yeah, and I also have a lot of American stocks for insurance. I
Yeah.
love the sector. For me, it's one of the best
Hmm.
sectors
I have the
because
same. I understand why Buffett loves it
yeah,
as well.
I mean you get paid the premium
Yeah.
beforehand. You get to invest it, and then sometimes you get claims, but sometimes you don't.
Yeah.
So
And as a customer, we know all too well
mm,
that we don't really have an option
yeah,
because the when once you're in bed with an insurance company and for instance house insurance, whatever casualty insurance, once they hike it by 10-15%,
mm,
it's not that you easily change. There is kind of something customer stickiness.
yeah, yeah,
Yeah. Yeah, I have that as well. And yeah, and then group is mostly in the Netherlands, right? So
mm,
it's just very much integrated. Comes from the former ING,
mm,
the Dutch lion there with the logo, I believe, and everything. That was with ING, I believe.
mm,
But it's like a household brand, and yeah, well managed. But I would even go for ASR. And about Munich Re and Allianz, I just wrote an article about the 25 top German dividend stocks on my blog on europeandgi.com. So if
mm.
people are interested, give it a visit. And I would say Munich Re is the best German dividend stock. I'm so impressed. I bought it at 160 euros or so, and I wish I bought like
yeah.
10 times more, 10
Yeah,
times more.
the same happens to me. I have my average price. Let me see. It's Munich Re. Yeah, it's also 180.
Yeah, look at that. For
Yeah,
me, it's 161.
yeah.
And I have a yield of current yield
Mm,
3.51%,
exactly.
yield on cost 12.3%.
Mm.
Would you ever have imagined that? Because the last time was again 15% dividend hike or something like that.
No, I guess it was more like
Oh,
20,
30. No, they went from
30.
15 euro to
Yeah,
20 euro.
30. Yeah.
Yeah. Who would have ever thought that a boring German insurance company with, I think they are hiking dividends since 1979,
Mm,
would do a 30%, 33% dividend hike? That's insane, right?
yeah,
I
exactly.
mean, you would expect that maybe from Visa in a good year,
Mm,
but not from a German reinsurer.
exactly.
Yeah. Yeah, it continues to impress me, the insurance company, and specifically in Europe, because in Europe, those valuations are still with a decent yield. Yeah, not
Yeah,
like sometimes in America.
American insurance company are really expensive because
Yeah,
they are like
yeah, yeah.
three or four times book value, and here in
Yeah.
Europe they are two times.
Chubb.
Yeah.
Chubb current yield 1.3%.
Mm. Yeah.
Yeah, amazing.
Mm.
Um, Daniel had also another question. He is asking, do you think that NN.AS is a turnaround with the future of hydrogen, the investments they are doing that?
That's that's a bet, but I don't trust the company anymore because, as I was telling before, the government has a 20% stake,
Yeah,
and they already got the dividend. They are slowing down
yeah,
growth, so for me, it's probably hydrogen will be the future, but we'll
yeah.
see.
Yeah, Derek and I are very pissed off still about NN.AS because they really surprised us with this. There was no indication. They were
Mm,
even very optimistic,
mm,
bullish, and then suddenly, poof.
yeah.
I hate that from management. That's definitely a dividend cut. Always worth selling.
Yeah, and the same
Yeah,
happened with the Red Electrica before because they also
exactly.
they were also saying that they were going to increase the dividend for I don't know how
Yeah,
many years in their
yeah,
strategic plan,
exactly.
and at the end they cut it. So
Yeah, no, it's we don't like that.
yeah,
Well, Daniel is on a row. He also asked about your question about Cajaxa Bank versus Santander.
yeah, CaixaBank. I don't like banks, so
Yeah.
so I don't invest in banks, and I
What
don't.
is your reason? I mean, people know pretty well why I'm not doing that, but what's your
Well,
reason?
for me, they are very cyclical stocks, and
Yeah,
I don't understand the balance sheet, so
yeah,
it's very difficult to analyze them. And I
yeah,
already had bad experience with Santander and
yeah,
BBVA and
yeah.
CaixaBank. I'm a customer of CaixaBank, but
Yeah.
not an investor.
Yeah, and in Europe, when you own a bank, the bank effectively is identified as a system risk.
Yeah.
So you've got nothing to say in terms of crisis. The government will and has also in 2008 and
Mm,
2009 built out, taken over.
mm,
So
yeah.
you're not safe as a long term as a dividend investor. I would agree.
Mm.
Philip O'Sullivan, do you have any views on Solaria Energia?
Yeah, it's a very volatile stock, I think, because I always hear on the radio that it has gone up and down, and it's a renewable energy stock, and I don't know even if they pay a dividend, so I haven't studied it,
Yeah,
but for me, it's too volatile for me.
yeah.
Yeah.
Last question then from Viverdi Dividende 2. What do you think about AINA SME?
AENA is the Spanish airports operator, and it's
Yeah.
also owned by the government. I think they have like a
Hmm.
40% stake, so I don't like to partner with the government.
Yeah.
Even though I
That's a
think
good
it's a
question.
very good business because, for example,
Hmm.
Ferrovial, another Spanish company, has airports in. I think they have a stake in Heathrow, and they have other
Yeah.
airports, and it's a very good business, but not INA is not so
Yeah.
attractive for me.
Yeah. Yeah. Hey, thank you so much, Eloy. We came to the end of the show.
Great,
Uh, I mean, thank you so much for joining during Derek's absence. I mean, I must say you're an amazing co-host. Like
thank you.
Alberto, I think you both are a book of knowledge, even though you stopped writing and maybe disengaged a little bit compared to how you were engaged in the past. I think this knowledge is not going away. I see, Eloy.
Thank you very much. Thank you for having me, and excuse my English because I haven't practiced in a while, so probably
Nah,
your listeners are going to understand a little, but
I
hopefully,
understand you very well, Eloy. First of all, secondly, I think people will have done an effort by the time they are here to understand you if they would even struggle because of the value of the information. So thank you so much. I really hope that you will come back on time again. I always very much enjoy listening to you. And yeah, I mean, thank you also for being a great community member. I know you are not so active anymore on Twitter as you
mm,
used to be, but I could see it when I posted that you would come on the show, how excited people got. So you really made
Mm,
an impact, Eloy.
mm.
So thank you for that, because we don't have a lot of people that can lead the community as well, just naturally. So
It's a
thanks.
pleasure to be here with you. It's you are you and Derek are great, and as I told you, I'm going to subscribe to your newsletter because I think it's worth
Thank
it,
you.
and I know what it takes to write. So I really appreciate what you're doing and helping the community
Yeah,
because
thank you. Thank you very much.
I know that you don't do it for the money. You do it for for the pleasure of writing and also for the community. So it's great to be
That's
here.
true. That's true. If I would do it for the money, the price would be 3-4 times higher.
Yeah. And it's amazing that you
And
have been doing a weekly podcast for 6 years or something like that. So
yeah,
257 episodes. Wow.
yeah, that's the time I could have spent with my wife, Eloy.
Yeah.
It tells me about priorities, right?
Yeah. I
Nah,
think.
she's honestly, I get this question a lot. She's happy that I'm doing this, because when you're like married I'm reaching 20 years, probably sooner than I'm after 10 years. Um, you know that as well. It's important to have a hobby.
Yeah.
Yeah, and I can say that this is my hobby, Eloy.
Excellent.
So that I don't lose time from the family while I'm doing this. I'm still around. I'm not in the pub getting drunk. I think that's what women very much appreciate at our age, that we are not doing stuff that is unhealthy for us,
Mm,
right? So
exactly.
yeah.
Gr-
No, good. Hey, if you
Great.
ever get the itch and the urge again to get going, I would say get going. The community would love it.
Thank you very
And
much.
otherwise, I'll just make sure that I poke you from time to time to have you on.
That would be great. It's a pleasure always to be here.
Thank you. Hey, to all the listeners, thank you so much. Derek is back next week. We have a few guests lined up, so it will be another interesting one again. And yeah, enjoy the weekend.